You're listening to Criticaleye's Asia Leadership Podcast. Criticaleye is a global membership community with over 2 decades of experience supporting senior executives in their roles. We work with board-level executives, giving them opportunities to build their knowledge, skills, and access independent reference points outside of their immediate networks. Whether you're stepping up into a more senior role or aspiring to do so, looking to hone high-level stakeholder relationships, drive operational performance, build your own personal resilience as a leader, or have longer-term career goals such as moving into a plural career, Criticaleye's approach supports a range of leadership challenges and ambitions.
Hello and welcome to the Criticaleye Asia podcast, Inspiring Leaders to Succeed. I'm your host, Bridgette Hall, Senior Editor here at Criticaleye, and today we're exploring what it really takes to lead the finance function through scale, scrutiny, and change. My guest for today is Joe Dische, who has been CFO at PropertyGuru since 2018, overseeing finance, strategy, and corporate functions across 4 Southeast Asian markets. He helped take PropertyGuru public on the New York Stock Exchange in March 2022, and later navigated the business through a PE-backed private deal. Before that, Joe has held senior roles across online media and telco, including CFO at iCar Asia, 6 years with Vodafone Hutchison Australia, and an early career at KPMG in London. Welcome, Joe. We're glad to have you today. I gave a little bit of a brief on your career journey, but let's start there. What for you have been kind of the key chapters and turning points that has really shaped your trajectory as a CFO?
First of all, thank you very much for inviting me. Much appreciated. There have been several sort of moments that have definitely sort of shaped my career. I suppose one thing I've found is that change can be good. So most common reason I always find that when I'm interviewing people for jobs is that there's change going on at their company and they're looking to move because things are changing. I made it a habit of always to hang around during change. And that's yielded, I think, a lot of benefits for me as time's gone past. My first CFO role was because the previous CFO resigned and they were looking around and the investors, I guess sort of picked me because they sort of trusted me. And it's been the same, through many journeys I've been through. I worked at sort of Vodafone when they merged with Hutchison and, there was a lot of change and that provided a lot of opportunities for me as the business sort of morphed as well. So I think, it's really embracing change, staying around, seeing what opportunities. That's probably been one of the things that has made various pivot points for me over my career.
How did you land up in kind of Australia/Southeast Asia? What took you out there initially?
Yeah, as you can tell from my accent, I'm English, born and bred in North London. I think I always knew that I wouldn't be in England for most of my life and my career. I don't know why. I've always found travel really fascinating. I traveled a lot when I was a kid with my parents. So I always knew I'd end up somewhere different. My move to Australia was really a combination of factors, partly because a lot of my friends had moved there, so it just seemed like a good bet. Secondly, there's always someone of the opposite sex involved, who's now my wife. So that was part of the sort of the pull factor to Australia, and obviously much, much better weather. But in Australia, I found, really good opportunities. I think the economy when I moved to Australia was very, very strong. They had a real need for certain skill sets, and I found it very, very welcoming and a lot of opportunities. And I've chopped and changed my experience there with experience back in the UK. My move to Asia really was a little bit around, again, the problem with Australia is it's quite a small market. And there can be not very much movement sometimes. So when you become more senior, there aren't so many opportunities. Asia always seemed really interesting. I've traveled there quite a lot on a personal basis. And there's been, a huge amount of change there and a huge amount of opportunities that I've been able to take advantage of.
Yeah, and we just discussed you like moving across markets and different industries. How have these experiences kind of shaped your leadership philosophy as a CFO?
Yeah, operating in Southeast Asia is quite very different from operating in other locations. And, you have to learn different leadership skills. So I think, in Australia, when I was there, I was a finance person looking after various departments, technology, sales, etc. And, you were never short of feedback. You're never wondering what people thought, whether it was your own staff and their ambitions or your stakeholders and what they wanted from you. There's a lot of feedback. And then you move to Southeast Asia where people are much more reticent to give that feedback, often much quieter, etc. So you need to develop a much more inclusive leadership style, one where you kind of get the best out of people by encouraging them to give feedback, encourage them to sort of participate. So it can be harder to find out what people are thinking. The classic thing in Southeast Asia is, you speak to someone, how are you doing? Great, thanks. Next week, how are you doing? Great, thanks. Next week, I'm resigning, so I'm not happy. And it's like, I asked you for the last forever how you were doing, and you said you're awesome. If you told me before you're unhappy, I could have done something about it. So I think you have to adopt a different leadership style, one where you can get more empathetic, maybe, and you can sort of second guess what people are looking for. Often speaking to others to find out what people need and spending more time, I guess. Whereas in Australia, the UK, people are pretty straight up with what they're after. So I think that's definitely one sort of piece of it. You have to be sensitive to other cultural nuances as well. Many of these countries it can be gender, it can be race, it can be different attitudes to things. So you have to be sensitive to those, and there's certain places where, projects and things that you might do in Australia maybe just aren't really appropriate in Indonesia, which is, of course, much more conservative on a number of levels. So you have to be sort of cautious around that. And I think people in Southeast Asia, work is a lot like family. You notice that a lot in Vietnam, a lot in Thailand. There's very sort of deep bonds between people who work together. So that often shapes how you work with people and how you promote people and get the best out of them. So there's a lot of cultural nuances, and I've definitely got those wrong when I first turned up.
Yeah. In the intro, I went through like a little bit of what you've done at PropertyGuru. You've been there for 7 years, which is quite a significant run, but been very busy. So what stands out to you when you look back at this chapter? What do you think your legacy would be?
Yeah, sometimes it's funny when I talk to people about what I've done at PG. It's been there 7 years. It feels like an entire career that's been sort of boxed into 7 years. When I joined, we were just coming out of the startup phase, getting into scale up. I often talk about this journey: startup, scale up, grown up. And I joined at the end of the startup phase. We scaled a business. I joined on the day that KKR were doing their first due diligence, which is reasonably a baptism of fire. So we raised $200 million, bought a business in Vietnam. We almost listed in Australia, actually came within 12 hours of sort of ringing the bell or whatever the equivalent was there. And that fell apart. But we dusted ourselves off, had a few drinks, and then sort of got back to work. And then we went through COVID, raised some debt, did some more M&A, and then we listed in New York. We then delisted. It feels like a whole career that's gone through in the last 7 years, and it was quite exhausting on occasion. Don't ever try and de-SPAC your company or list it in New York at the same time as you're doing your largest piece of M&A in multiple time zones. That's one recommendation I give to people, because that won't be great for your personal mental health. But I think our legacy is that there aren't very many successful scaled businesses in Southeast Asia. Everyone was trying to de-SPAC and list on New York, and only really 2 companies did that successfully, which was us and Grab. Out of maybe 40 or so that were trying, maybe more. So I think that's a great achievement, and successfully scaling and growing just a tech company in Southeast Asia, we've done really, really well. And I think that's testament to our great business model, but also the great people we've had as well, and the great investors we've had. So I think that's probably the legacy for myself, but also for the whole company.
Yeah, you mentioned your SPAC listing there, and then obviously you delisted and did take private deal. And I'm just wondering, what did each phase of that demand of you as a CFO? How did those experiences differ?
I must be some sort of masochist. I really enjoy being listed. I enjoyed getting listed, and I enjoyed being listed. It's uniquely stressful. I think I work very well when I'm pointed at a specific goal. And it's one of the reasons why I like working with PE, to be honest, is that you're never going to die wondering what they want. So you've got some very clear, straightforward goals for yourself. And when you go into a listing process, it is, it's sort of all encompassing, and you find yourself working with different stakeholders, spending time with different stakeholders. My lawyer at Latham, whose name I won't mention because I'll embarrass her and stuff. I mean, you spend an awful lot of time together. We joked it was a bit of sort of when Harry met Sally, because she was the last person I spoke to at night and the first person I spoke to every morning for about 9 months when we were going through this process. And you develop close bonds and friendships all remotely because it was during COVID. But and you develop a different kind of sort of skill set for that. But being listed is a CFO's fun. I mean, it is high stress. You run quarter to quarter. You've got to have a story, you've got to deliver, you've got to have a messages. It's not a place to do bold things that might backfire, to be honest. It's a place to stick to a strategy, communicate it well, and execute. And the advantage, I think, of being listed is we are able to really reinvent the business. We've refocused it since AQT have come on board. We made decisions around parts of the business that would have been really difficult to make in the public arena. And yeah, I think it frees you up a little bit. Doesn't make the reporting any easier, to be honest. Being part of a 100% owned by a private equity firm, AQT are fantastic investors, but they help a lot, and they're very involved and engaged. So I wouldn't say it's easier, but it's different, and it does give you the flexibility to do maybe bolder things in the short term.
Yeah, I was going to ask how being private kind of affects the mindset of the leadership team and the pace of decisions as your role as CFO.
Yeah, look, I think, I used to spend half my time probably on externals. So investor relations, on external reporting, etc. And then suddenly that all changes. I also spent a lot of time on M&A because we had $300 million on our balance sheet, and M&A was a big part of our story. And, under the AQT's ownership, we're really working with the assets we've got. And obviously the whole external funding thing is not required because we're 100% owned by those guys, and they're very, very supportive from a financing perspective, even though we're cash flow positive. So not really required. But yeah, your focus becomes different. You're focused on rationalising the business, delivering to the business case that you've mutually built, which I think is important, communicating with different stakeholders. And yeah, the focus is on much more internal. It's much more on transforming your business to become more profitable and more efficient. It's just, flipping a mindset. It's more similar to scaling a business in a way than being listed. But look, it's all good, and it presents different challenges and different opportunities. It can be confronting because you obviously build, when you're a listed company, infrastructures, frameworks, you hire people to support SOX compliance and that high level of sort of reporting capability, and you don't need those skills anymore. So, there are a lot of people changes, which can be, very sad, but, we always at PG treat people, humanely and well and decently, and you always get sort of the best outcome for everyone involved. So yeah, it can be challenging and refocusing, but, ultimately it's a different part of the brain you're using.
Yeah. And balancing that kind of growth and profitability is kind of constant tension, I guess, especially in tech. How do you guys kind of approach that trade-off?
Yeah, look, there was a golden era, probably, I would say between 2016 to 2020, 2021, when money was pretty cheap, growth was all that was important. Companies were valued at multiples of revenue, and, it was all foot to the floor. And, profitability was something that was important in theory, but probably less in practice. Some would say there was the good old days, and some say it was the bad old days. But look, it was a very kind of sort of different period. And then you obviously fast forward to now, where businesses generally are more around, obviously there's exceptions around the AI space, but generally businesses are more focused on profitability, proving business models, EBITDA or cash multiples for valuation. So I think, that's quite a different set of requirements for a business, and many businesses haven't adapted to that. And you always have to balance out. There's no point getting to $100 million and becoming really profitable if your objective is really, it's much better to get to $1 billion and then become much more profitable. There's just much more money to play with, to be profitable from. So you've got to balance up those things. And I still believe if you're a high growth company, it depends what phase you're in. We're no spring chicken. PG's been around for some time. We're well through the scaling to scale up to grown up phase. And we're very much in, maintaining high growth, but also with our level of revenue, delivering a lot to the bottom line. But there's plenty of great companies out there that are still in the need to get that revenue growth up before they focus on profitability. Many companies like Slack, I think, was listed and then bought by Salesforce and never turned a profit, sold for 27 times revenue, which is a nice little earner. Companies like Amazon didn't show profit for many, many, many years and still grew. So I think you've got to balance out getting the scale before you maximize the profitability. But you do need a business model that's proven or unit economics that works. But there's nothing wrong with that. But you have to be able to turn a profit at some point. After all, the amount of cash you throw off is ultimately a sense of your value.
Yeah. I want to touch on a little bit on your role as a CFO now and how you've kind of seen it evolve over the last 2 decades. Where have you seen it change the most, and kind of what do you think is different and what's expected of a really like top CFO?
Yeah, I think CFOs come in all sorts of different types and colors and shades and shapes. And you need a different type of CFO for different stages of a company's growth. And I think that hasn't changed. If you're a very small, high growth company, you need, a CFO who can focus relentlessly on making do, on making back office systems fit in while you're focused the business solely on growth, who can, raise money quickly, who can do M&A quickly and, worry about fitting it all together sort of later. So that's one type of CFO. In some companies, you need somebody more who's it's as steady as you go. It's more bookkeeping. It's more technical if you're listed, etc. And then, at the other end of that, you've got your scaling companies who really need a CFO that's deeply commercial, somebody who can sort of balance that growth and profitability piece. So I think you need different CFOs for different times. Although I think overarchingly, the requirements of a CFO are greater now. As a CFO, you're really a commercial leader. A number of CFOs become CEOs. I think that's a reflection of the importance of, the relative importance of numbers and economics, et cetera, to the CEO role. And obviously CFOs have that skill set. But I think CFOs, really good CFOs, are meant to be much more well-rounded commercial leaders in the organization. You can't be socially dysfunctional and incapable of explaining things to investors, explaining things to staff. You need to be inspiring in the way that you communicate. So I think the biggest change is you need to be an all-round business leader. That's, I think, the main thing. You need to be able to have all of the skills that a CEO has of communication. You need many of the skills that a technology person has in terms of how do you use technology in an organization. You have to have good people skills. You have to be very well-rounded, I think, to be successful. So that's probably the main thing. And, I think the CFOs always have the habit of just picking up everything else that's left. As Joe, the CFO organization, which is what I look after in PG, it's sort of all the stuff I should be covering and all the stuff that no one else wants to cover. So, you have to be a person who can turn their mind and their attention to different things at different times.
Yeah, I guess it's both that attention to detail and the bigger picture at the same time.
Yeah, absolutely.
How do you partner with the CEO? Because that CFO-CEO relationship is so important, and can be really like make or break dynamic. So what is been your approach to kind of a healthy partnership, and how did you build that at PG?
Yeah, so I think we have a new CEO at PropertyGuru, Lewis, who I haven't worked with for very long, but Hari, who left at the start of this mid this year. I worked with him for about 7 years. We have a very close relationship. I think it's based between us. It was based a lot, firstly, on trust. So he needs to trust that I will get the stuff I have to get done. So numbers will appear, they will be accurate. Compliance will happen. Nobody will go to jail, touch wood. Those kind of things. So it's getting the basics right. And then I think it becomes really about partnership. And I think between Hari and I, we spent a huge amount of time together. I think 2019, I spent more time with him than I did my family because we were trying to list the company in Australia. And you need to get on, but you need to have different skills. And, Hari always said I was a bit like his sort of parachute. If you've got a good CFO as a CEO, you can really push the envelope, knowing that somebody's going to sort of pull you back a bit if you're pushing too hard. So I think that was a cornerstone of how our relationship worked. He would, for example, push hard on product or pricing or hiring or M&A opportunities. And, I would be there to support, but also sometimes to say, look, I think maybe that pushes us a bit far. We're trying to do too much. We should slow down here maybe, or maybe we should, quicken up here. So it was that sort of partnership, that thought partner. And on a personal level, you've got to be able to get on. You've got to be able to laugh at each other and with each other. I think those are some of the sort of key things, because inevitably you spend a lot of time, and we spend a lot of travel time together and a lot of these kind of things. So it's that sort of fundamental getting on, in inverted commas, that's also really helpful.
How do you then kind of cascade that to the board? Because you've obviously worked with board through some kind of very complex transformations and transactions. So what have you learned about building strong relationships? What does that good dynamic look like?
Yeah, board dynamics are very different. I choose my words sometimes carefully here. You need to put your mind, I think, with boards in they're very public boards and private boards are very different for a start. So at PG now, we have a fantastic board actually of deep vertical expertise. So these are people who really been there and done that in our industry in different markets. That's the private equity, the equity model is they bring highly skilled, highly capable people with very relevant experience in to help the company. So it's like you've got a load of consultants there who are, good business leaders, but also good specialists. So that's really, really helpful. And the equity members on our board are also good. They've seen a lot. They have a lot of access to support and help. So, they're all focused around delivery to a business plan, delivery to an overall outcome. And you actually find yourself very aligned with these people because you're all really, management and the board are on the same incentives, same whatever. You just want to make a success in the time frame. And I think public boards are quite different. Public boards, there is the same, but they're there for governance as well in a different way. There's definitely governance in a private board as well, but it's less to the forefront really because there's less need for it. But in a public setting, there's obviously a huge amount of scrutiny and a huge amount of personal liability for directors. So I think there's a different lens they bring, and you've got to put yourself in their shoes, and you've got to, be aware that there are certain hot button topics, things like, risk, litigation, making sure we're complying with rules and obligations and all that sort of stuff. So I think different things take different priorities, and that's they're there to keep the company on the straight and narrow. So yeah, my best advice is really putting yourself in their shoes. I think directors generally very sort of respectful of management. I mean, management's role is there to run the company and directors are there to, offer advice and support. Directors generally want to make sure that their opinion has been heard. It's very important to acknowledge a director's input. And I think most directors I know, the good ones, are okay if that advice is not necessarily fully taken, as long as it's been absorbed and understood and appreciated in context. And we've had several times where the board have suggested something or there's been a difference of opinion between management, and ultimately management's taken a course of action and the directors are happy with that as long as their thoughts, the risks, etc., have been taken in. So I think it's very important to respect and mutually understand and take their opinion. I think that's probably the best advice I give people.
Yeah. What was like one of the most challenging moments that you went through that you kind of wouldn't want to repeat?
No, I think there've been a number along the way. I think not listing in Australia was quite challenging. I think that was, 9 months of work to come down to one short period of time where the market sort of decided that it was kind of, it was November and it had enough IPOs for the year. There was a bit of risk in the air and that was highly disappointing. I actually was on a flight from KL and Hari, our CEO, was on a flight from Singapore, and there was no Wi-Fi on the plane at the time. Shows how long ago it was. So I stepped off the plane and saw like 130 WhatsApp messages or something, and I slowly ploughed through them, watched the whole transactions sort of dissipate and then not proceed. So I was sat in Sydney with purpose of I went down there not happening. So that was that was a bit of a knock. But in the end, it all happened for the right reasons, and we ended up listing in the US. So that was fine. But yeah, that was tough. You haven't spent a lot of time with your family. You've had a very good, strong goal in sight, and it's just sort of not happened. So you've got to dust yourself off and move on. But the company gained a lot from that experience. We had a great board at the end of that. We cleaned the company up a lot, learned a lot all round. So it was not a negative experience. But yeah, that was a pretty tough moment, I would say. It was a bit disappointing. IPOs come down to sentiment. So the one thing I've learned, it is raise money when you can, not when you need it. When you need it, you won't be able to raise it. So just raise money when you possibly can. I loved it when the Canva guys raised money and then someone said, what are you going to do with the money? And they were like, I don't know. And they were like, why did you raise money? And I said, well, because I can. And the valuation was awesome. I'll work it out later. So I think always raise money when you can, within reason. And then you'll never be ready for an IPO. You just got to pick the moment that the IPO is ready for you. Sounds like a terrible cliche, doesn't it? But yeah, just don't over plan it. You'll never ever be ready. So you just when the window opens, just go for it, and then the rest of it you can work out later.
I love that. little bit more personal now. What's next for you? Are you looking to do kind of more NED roles, or what do you see in your future?
I see in my future. Well, so I mean, I've re-signed up. So I'm working with EQT for the next 4 years, entering another stage of PG. So I'm continuing to be CFO at PG, and there's another whole new phase, which we're almost a year into now, actually, with EQT of changing the business and focusing on growth and profitability and entering another turn. So I'm doing that again, which is great. I really like the EQT people, I like the board, and really love the people I work with in the industry. And I think we have a real good social purpose. But now I do some other stuff as well. I'm a board member in a company in Australia, which is really interesting. It's very interesting to be the other side. I have been a director before on a listed company, but this one is a good one and similar industry. And you get the opportunity to be the director that asks, the CFO to. I'm chair of the audit committee as well, and it's nice to be able to ask for things and not have to do them all yourself necessarily. And it's nice to have that different perspective on things and add value where you can. So I'm enjoying that, and I'd like to do sort of I guess more of that, because it gives you a different perspective and teaches you things you can then bring back to your current job as well and broadens your experience. So I think those things are very rewarding. I hope to do more of them in the future.
And finally, reflecting on everything, what advice would you give to kind of an aspiring CFO or someone stepping into the role for the first time?
Yeah, look, interesting question. I've talked a bit about a few sort of specific ones in terms of funding, etc. When I became CFO the first time, my CFO at the time said, this is all a bit serious, but he said, you are always the moral guardian of the company. Now, that sounds all a bit deep and serious, doesn't it? But it is partly true. You, as CFO, you do need to really, and the finance organization need to really set an example to the business. I think that is important. I think people do weirdly look up to the finance team and the CFO as to be that parachute. So, they try and do things knowing that you're going to stop them if they're doing something that's too outlandish. And I think at the same time, you do need to be that, you need to conduct yourself well, set an example. I take really seriously, as everyone should, anything where, rules and policies not followed within finance, because you've got to set an example to everyone else in the business that that's the way to behave. So I would say that. I think there is an inherent responsibility with being a CFO that goes above and doesn't mean you can't have fun, by the way, but it just means you always need to be conscious that you're setting the tone and the example to the organization. So I think that's one thing. And the only other thing is I would always encourage people commercially just to think about finance is an enabling function. We're not a support function, we're an enabling function. We're there to enable the business to be successful. Companies aren't run for finance, if that makes sense. Finance, works for the company. And you should always consider all the people in the business your stakeholders. And you should always try and make the company run better, enable and free up people, give them great advice, help them make good decisions, etc. And I think if you stick to that, the fact that you're enabling the business to be successful, you probably won't go too far wrong.
Thank you. And that's a wrap. Huge thank you to you, Joe, for joining us and for such a candid tour through scaling and how the CFO role is being redefined. If you enjoyed this episode of the Criticaleye Asia podcast, please follow or subscribe wherever you're listening and share it with a colleague who'd love to hear Joe's insights. You'll find all the links and key takeaways in the show notes. And if you'd like to continue the conversation, connect with us on LinkedIn. I'm Bridgette Hall. Thanks for listening.